Welcome back to my channel. I wanted to cover Allstate, the insurance company, and revalue the company, analyze the company, research the company. They announced their earnings last week, and the earnings were well received by investors. The stock did rally after the earnings were released. I'll go through the earnings and point out the good news, the bad news, any opportunities and problems that I see with Allstate. It's a stock that I own, and I'll make a decision whether I should buy more shares, hold, or sell my shares in this video. I'll also value Allstate based on the future free cash flows that I expect Allstate's going to produce, as well as the earnings per share that I expect they're going to produce, discounted to a net present value and comparing that net present value to the current stock price. So we'll go through that together. Let's get into the earnings. So overall, they did have a very good quarter where they grew the business by 5.8%. That was very good growth. And overall, the profitability increased because they were able to manage their cost really well. In fact, their revenue went up and their costs went down. That's like a double positive. Nicely done. The company pays a nice dividend and they've been buying back shares. It was a good time to buy back shares. The stock was not flourishing. This is not a dog stock. It's been doing well over the last couple of years. But for the last 12 months, there were opportunities when buying back shares was a good idea. So I agree and think that was a good idea for them. So overall, the book value per share of the company, now I don't use that a whole lot with insurance companies, but it's good to check in on it. Really expanded from $62 per share to $82 per share. Nicely done. 32% increase in book value. So just good stuff showing that Allstate is a good insurance company. One thing that I've observed in California specifically, California has really expensive real estate, and we also have a lot of wildfires. And Allstate has managed their risk in California by lessening the numbers of homes that they cover, just so that they don't get toppled over by a big wildfire. So those are the types of things that they have to do. That way they don't go bankrupt and they continue to operate effectively and deliver really good returns to investors. Allstate is a $52 billion market cap company, and they have revenues of $66 billion. The company has a low PE ratio of 9.4, and they pay a dividend of 2%. The price target that analysts have consensus on is 14% higher than the current stock price. The stock year to date is up 4.26%, and you add the dividend for a half a year, you're up to 5.26%. That's underperforming the S&P, which is now up over 6%. Over the 1 year, it's up 17.4%, and over the 5 year, you see that buying Allstate a couple of years ago was a great idea. You could have bought it for $101 per share, and it's up to close to 200. This was a great time to buy. I did buy shares in this era. So the market really offered a nice discount back here. So overall, this stock's been a good stock. Allstate is a good stock for older investors or investors that are risk averse. They don't want to take a lot of risks. Allstate's a very well-known company in a very well-known industry that has a lot of history, a lot of data for us to look at. So this stock is performing well, but it's not going to be like a Palantir or a Robinhood that really goes up fast, nor will it really go down really quickly or surprise investors. So it's a good stock for older investors that want that income, or investors that are going to want to have a portfolio of lower risk stocks. As we look at the income statement, nice growth on the top line. And the top line growth, again, I say this over and over again, but it's really important, which is top line growth means that they're getting more customers. Customers like the service, the product. They are buying more of their product. All those things are very positive. On the opposite end, if a business is losing revenue, it's the opposite. Customers don't like them as much as the competition, and they're going to the competition. They're not buying as many products. So the top line revenue for a company this size is very good, close to 10%. I'm using their a 4-year average for free cash flow because the cash flow just really jumped up and I didn't want my valuation to be too high. So I'm like, okay, let me go conservative. And I took an average, especially the last couple years, 23, 22. The free cash flow wasn't great. It had actually gone down from a high of 2020, but now they're really booming. They're creating a lot of cash. Overall, their profits. This is an insurance company. One thing that is reality with insurance, it's a regulated industry. So regulators will work with insurance companies, and you're not going to see insurance companies have like massive margins because the consumer would really, cry foul. Hey, our insurance rates are really high, and the insurance company's making 40% net profit margins. Yeah, we can't have that. But we could see a very well-run company have profit margins of 8.6%, free cash flow margins of 13%. Those are very good margins for an insurance company. Again, this is going to be a stable, safer stock, so that's why it's acceptable. Analysts, 14 of them cover the stock, and the most optimistic analyst has a price target at $267 per share. That'd be a nice rise. And the most bearish analyst has a stock price of 197. So very little downside risk. So you see how this is a safe stock. On average, price target 228. So investors, if you believe the consensus, you'd make a return of 12, 13, 14% and get paid that dividend. To a lot of investors, that's pretty darn attractive. This year, the company was going to grow from 25 to 26 by 8% and then keep growing. That looks really good. I like the revenue forecast that I'm seeing, and 22 analysts are weighing in on that forecast. The earnings per share is going to expand 19.4% up to $21.90. I'm going to use that number in my evaluation of the company. So it looks really good. Company is operating really, really well. How desirable do I consider Allstate to be? Measured by the strength of their moat, their ability to keep competitors out of their market, and therefore really have control and power over their industry, and their ability to grow profitability, and grow free cash flows. Well, I put Allstate in the gray, meaning it has medium desirability. And when I look at their scorecard, when it comes to competition, as mentioned, they do have competition. Progressive, Geico, they're out there and they're good companies too. So they have to compete against one another. That's why we see so many commercials for Allstate and all the insurance companies. Their network power is okay, but it's not great. Their balance sheet's good. Revenue growth is good. Profitability is good as well. And their free cash flow is really good. So overall, this is kind of a acceptable, good company, but you have to offer me a compelling discount to buy shares of Allstate. It's not a stock that I want to pay a fair price. I want a compelling discount in order to invest in Allstate. Allstate is owned by institutional investors, 3 of them, showing that Allstate is recognized as a good stock to invest in. Now, these investors are not like high growth investors like a Tom Lee or others that have these high growth stocks. These are probably investors that are attracting buyers to their funds that want stability, income, and so forth. When I value Allstate using a forecast of free cash flows and getting a net present value of those cash flows, and I also look at earnings per share and value the company based on the expectation of future earnings, I get a discount of 52%, which is quite compelling. That's a nice discount. And when I look at their free cash flows and I look at their forecast, I've used a 5-year average because the most recent year is just really high. I don't want to use a really high year. I want to go more conservative and use a 5-year average, which brings down the number substantially. And I think they're going to likely operate at this level or maybe even exceed it, which would be even better. I add a little bit of cash and a little bit of debt that they have, and I get a discount of 59% if I look at their cash flows. When I look at their earnings per share, it's also positive, and I'm only using a PE of 12 and a growth rate of 5%. So It's also showing a nice discount. So a compelling discount on a company that has moderate desirability. And again, this is a good stock for an older investor looking for stability, looking for an income, not necessarily for a really young investor that's looking to grow their capital over many, many years. For me, this is a good stock. I have a portfolio that has a lot of growth, but I also have a nice set of stocks that are safe stocks, good dividend stocks, and this is one of them. So I'm going to continue to buy shares of Allstate. I'm going to buy on dips and try to be smart about when I buy this particular stock. Thank you for watching the video on Allstate. I hope you found my analysis and research interesting. I wanted to tell you about a paid member program for this YouTube channel. It provides you more access to member-only videos, member calls, a Discord server that we have for the channel, and on live streams, you can nominate tickers that I could review on the live stream and do deep dives on. I think it's really well worth it. It'd be a place where you can really grow your knowledge and your skill set around investing. To take a look at your options there, go to the home screen of the YouTube channel, look for the join button toward the bottom of the screen. Click on that button, you'll be presented the 3 different options to get signed up. And if you do get signed up, please email me at victorhinvesting@gmail.com. I'll get you set up on all the perks that you'll get. Thanks again for watching. Good luck with your investments.